Hello everyone, welcome back. This is Jeff from Mysteel's iron ore department, here to give you the latest on China's ferrous market. Let's dive in. The ferrous market continued its slight downturn over the past week, as steel fundamentals experience emerging pressure amid inventory declining at a slower pace. In addition to factors attributed to the traditional off-peak season, the Dragon Boat Festival holiday further weighed on downstream consumption. Market sentiment remained subdued, though some positive macroeconomic signals helped partially offset the pressure. Notable among these was the first talk between the Chinese and U.S. presidents and the People's Bank of China's announcement of a 1 trillion yuan outright reverse repo operation aimed at maintaining ample liquidity in the banking system. Volatility also increased in the futures market, especially for coke and coal. This was driven by a series of rumors related to a possible Mongolian coal resource tax, production cuts in some of China's coal-producing regions, and concerns over cost increases linked to China's new mineral resource law. Uncertainty regarding future Mongolian coal export policy further contributed to the volatility. While these developments lifted sentiment across other ferrous products in futures market, spot prices failed to reflect the same momentum. Steel market fundamentals saw a narrowing decline in total inventory as both supply and demand declined, with the contraction in demand outpacing that of supply. More specifically, construction steel demand dropped more sharply than flat steel, largely due to the heavier seasonal impact on construction activity. Flat steel demand remained resilient, supported by a short-term rush in exports ahead of potential trade disruptions. Both integrated and mini mills saw minor production reductions, which weighed on raw materials as a result. Blast furnace production edged lower, though it remained at elevated levels, supported by current steelmaking margins. Despite this, further maintenance activity is expected in the coming weeks, which is likely to cause hot metal production to fall at an accelerated pace. Despite the strength in the futures market, spot coke and coal prices remain weak amid persistent oversupply, although production fell due to safety requirements. In addition, the third round of coke price cuts was implemented as inventory levels continued to climb. Moreover, lower coke prices have partially eased the downward pressure on iron ore, and total portside iron ore inventories recorded a slight decline during this period. Looking ahead, downstream demand is expected to face further challenges from the off-peak season, including increased rainfall and high temperatures. Export support is also likely to diminish, while overall market sentiment remains fragile following recent comments from U.S. President Trump regarding potential tariff increases. However, the call between Chinese President Xi and U.S. President Trump may provide a temporary pause. Iron ore prices are expected to be influenced by firm near-term fundamentals and a weakening outlook, which will likely keep prices fluctuating range-bound until a more significant drop in hot metal output materializes. Thanks for tuning in to this week's China Ferrous Market Update. We'll see you next time.